So
Hmm.
that's the take on Wells Fargo. Let's review another name from last week for where we're at with it. And this is Rocket Mortgage, ticker symbol RKT.
Yeah. So I've been looking at Rocket Mortgage. I wanted to draw people's attention to Rocket Mortgage. Let me go ahead and back up a little bit. I'm going to go to a whole year. So you can see Rocket Mortgage has been in this sideways channeling pattern. And you can actually see that Rocket Mortgage, first of all, it's affordable. So it's under $10 a share for the underlying symbol. It's got the liquidity and the option chain that we look for, because one of the things that we have to check additionally for is to make sure that people are trading these things, and people are definitely trading these things on both the call and the put side. So we've got a lot of activity. I'm looking right here, by the way, at the January 2024 expiration. This would be the options that we're thinking about to use as a substitute. And so what I wanted to feature about Rocket Mortgage is a potential top being found. So in this case, instead of buying the stock, we would short the stock. And you can only short the stock if you have a margin account, so keep that in mind. But there is an alternative, which we've been talking about. You can substitute the shorted stock by buying a deep in the money, far out in time put. And so that's what I was looking at this morning. I was looking at this one over here. I like to compare the extrinsic price to the mark price. So I was looking at this one. That's approximately 10%, right about here. There's this $15.99 strike price option right here that is expiring on January 19th, 2024. It's going for about $7.12 right now as we speak. And so this might be the option that I target. And this would turn that margin trade into a cash trade. And it would set me up for selling put premium, not call premium, put premium. So this would be the initial covering position, so that when this thing dips down, we would go ahead and think about selling put premium. So it's a little bit different. Everybody thinks that premium selling is only covered calls. That's by far a fallacy. In fact, covered calls are maybe the strategy we use the least. This is covered puts or a bear put diagonal debit spread. We got a signal on yesterday evening, and we're waiting to see if today or maybe even Monday would be a good opportunity to buy one of these deep in the money, far out in time back month puts as our initial covering position, and setting us up for selling put premium in the future.